The US dollar just took a nosedive, and it was all because of one man's carefully chosen words. In a dramatic Friday trading session, the Japanese yen surged powerfully against the US dollar, completely reversing its recent trajectory. The currency pair, USD-JPY, plummeted by nearly 1%, falling from a peak of 148.78, its highest point in 3 weeks, down to trade near 146.66. This wasn't just a minor fluctuation. It was a direct and forceful market reaction to comments made by Federal Reserve Chair Jerome Powell at the prestigious Jackson Hole Economic Symposium. Powell's highly anticipated speech sent a clear, albeit cautious, message to the markets. He openly acknowledged growing downside risks to the U.S. job market and pointed to the economic uncertainties brewing from potential higher tariffs. But here's where it gets interesting. While he deliberately avoided explicitly promising an interest rate cut in September, his overall tone was interpreted as surprisingly dovish. This single speech effectively poured fuel on the existing market speculation that the Fed is getting ready to shift its policy and cut rates to support the economy. The immediate aftermath was a whirlwind of repricing. Market participants, interpreting Powell's words as a green light for easier monetary policy, rushed to adjust their bets. The probability of a 25 basis point rate cut at the September Fed meeting, as tracked by the CME FedWatch tool, skyrocketed from approximately 70% to a staggering 90% by the end of the day. This seismic shift in expectation triggered a massive sell-off of the US dollar. The US dollar index, DXY, which measures the dollar's strength against a basket of 6 other major currencies, tumbled from a 2-week high of 98.83 to around 97.75, effectively wiping out all the gains it had accumulated over the earlier part of the week. And this is the part most people miss. The yen's strength wasn't just about a weak dollar. It was a standout performance. A look at the currency heat map reveals that the Japanese yen was the single strongest major currency on the day. It gained ground against every other currency it was paired with, but its most significant victory was, without a doubt, against the US dollar. For example, the yen gained over 1% against the USD, while its moves against others, like the euro, EUR, or the Canadian dollar, CAD, were far more modest. This table shows the percentage change of the Japanese yen against other major currencies, with the JPY's strength clearly visible. Now, let's get a bit controversial. Some analysts argue that the market might be overreacting to Powell's rhetoric, setting itself up for disappointment if the Fed doesn't deliver a cut as soon as September. Are traders hearing what they want to hear rather than what was actually said? Powell emphasized data dependence and flexibility, not a guaranteed timeline. Could this be a classic case of buy the rumor, sell the news, where the yen's rally fizzles if the Fed's actions don't match the market's heightened expectations? What do you think? Is this the start of a sustained downturn for the US dollar, or just a temporary overreaction? Let us know your take in the comments below. Standard risk disclaimer. This content includes forward-looking statements that involve risks and uncertainties. The markets and instruments discussed are for informational purposes only and must not be construed as a recommendation to buy or sell any asset. It is imperative that you conduct your own thorough research before making any investment decisions. We do not guarantee the accuracy, timeliness, or completeness of this information. Investing in foreign exchange carries a high level of risk and may not be suitable for all investors. There is a possibility you could sustain a loss of some or all of your initial investment. The views expressed here are solely those of the author and do not represent the views of FX Street or its advertisers. The author is not a registered investment advisor, and nothing herein is intended to be investment advice.